Hi, this is Michael Kramer of Ma Capital. Today is Tuesday, September 16th, and it's around 4 p.m. New York time. So not much happening here in the U.S., at least over the next couple of days from a standpoint of economic data. Tomorrow we'll just be getting some housing starts data. We'll come back to the Fed meeting in a minute, followed by initial jobless claims, Philly Fed, and leading index. But outside of that, we're not really looking at much economic data here. The big focus obviously will be on the Fed rate decision Wednesday, September 17th here in the U.S. at 2 p.m. Eastern. Market expectations, analysts are looking for the Fed to cut rates by 25 basis points to 4 to 4.25%. And so after the Fed rate cut, the most important thing that people will be paying close attention to is really that dot plot and seeing where the Fed is projecting Fed fund rates to be, in the future. And that's going to really have the biggest impact not only on rates, but also on currencies and FX movements and equity markets to some extent because of where things like implied volatility will be priced. And then also Thursday the 18th, which is we're going to have the BoJ rate decision. Now that, again, market expectations aren't really for the BoJ to do anything when it comes to monetary policy this time around. Again, people will be paying close attention to what they have to say. How does a statement read? What does Ueda say at the press conference? Are there any hints that maybe the BoJ will be looking to raise rates again in the future? And again, this will have big impacts mostly on currencies and maybe long end rates. Then we'll also be getting the BoE rate decision on Thursday, September 18th as well. It looks like we're not looking for any change there. Again, we're going to be paying attention to any sort of idea of whether there'll be a future rate cuts to come. Will there be any changes and tweaks with quantitative tightening? The biggest impacts, at least immediately, will probably be seen in the currency markets. And you can already see the euro today kind of preparing for that rate cut. We've been really, for quite a long time, we've seen the euro stuck in this range. And maybe it's because we're one day closer to the Fed cutting rates here in the U.S. and we have some clarity now that perhaps the ECB is going to be on hold for the foreseeable future. It may even be that they're just done cutting rates completely. And so we did see the euro break out today finally. We even saw the euro break out on the RSI. So it looks like right now the very short-term resistance level comes right around 119. But once you get past 119, I think you have a really good shot of moving up towards this 122.70 to even 123 area. Again, this has been sort of something we've been waiting to see happen now for a really long time, and it looks like it's finally happening. So again, I think the bias right now for the euro is upward. Unless there's some sort of big surprise tomorrow from the Fed, I would think that the trend is this is probably going to continue higher. We look at the pound, also got a big breakout today as well, rising above the highs last seen in mid-July, getting above this 135.70 area. Again, with expectations that the BOE is not likely to do anything at this meeting, it seems more likely than not that, if the Fed does cut and signals more cuts to come, we could see a pound challenge this 137.5 region. And really, if it breaks above this 137.5, we could be talking about the pound really moving back up towards this 140 area. Again, unless there's some sort of surprise, I think the bias for the pound will be higher as well. And when we look at the yen, that also showed signs of potentially breaking out today as well. Got very close to breaking below this 146 level. As long as the BoJ leaves the market thinking that rate hikes are coming at some point in the future and the Fed doesn't surprise, I would think that the yen is likely to head back towards this 142.90 area. Now, interestingly, we did see gold today rise up to around 3,700. That kind of suggests that I think gold has pretty much met its target in terms of what we were looking at here for it. If you measure from here to here, you can see gold, the target was 37.10. If you're measuring from the low to the high of the ascending triangle pattern. So it's possible we see gold go further, but at least from this standpoint, gold is kind of what I would say hit a target. It looks like, again, gold, on the upper side, it could maybe go to 37.70 or so. RSI is all the way up to around 80. So, I mean, gold is fairly overbought. Gold could find itself very much in a, you know, buy ahead of a Fed rate cut, sell the news type of thing. But with the dollar index also potentially heading lower, that could be one tailwind that could really help to push gold even higher. But again, it's kind of at a spot where you would probably expect to see it consolidate again for a little bit. Tesla has moved up pretty dramatically the last couple of days. It looked like at one point it was going to break lower, and then we bounced right off that trend line 2 times and we just took off. The thing about Tesla right now, again, just like gold, it's in a really overbought position. In fact, Tesla looks more overbought and overextended than gold does. And the reason why I say that is because if you look at the RSI on Tesla, it's about at 80. And you can see we've been above the upper band now for 3 days in a row, really 4 days in a row. And that's a pretty overextended condition. Generally speaking, when we get into conditions like this, I would expect at least a period of consolidation sideways for a couple of days, if not just a flat out pullback down to maybe 364 or so, which would be a test of the breakout we previously had. So again, I would think at some point we're going to get some sort of consolidation in here or some sort of pullback. Tesla just looks like it's run too far, too fast, and it probably just needs a little bit of a cool off before it decides what it wants to do next. So we've been bearish now on the DAX for a couple of weeks. We've talked about all these different rising megaphone patterns, really going all the way back to May. Each time we got a breakdown, and got to this lower end of the range around 23,300. The third one we got down again. It looks like now today we closed right at the lower Bollinger Band, right below 20,000, right at 23,300. RSI still around 37, which suggests it could really still go lower. Really for the DAX now, it's going to be whether or not we can get below the 23,000 even number. 23,300, 400 has certainly been an area of support. But if we break below 23,000, I think that's going to open up a chance for a gap fill to 22.5, maybe even all the way back to 21.3. But this is starting to look like maybe it's formed some sort of triple top pattern. But again, we need to really see really convincing confirmation of that. And while we got closer today to that happening, I think we need to get below 23,000 for that confirmation to be give us a little more conviction. We've seen the FTSE also now begin to look like it's starting to struggle. You can see the FTSE's RSI is starting to move down at a little bit of a more rapid pace. You can see the RSI change in trend. You can also see it looks like maybe a double top pattern that's forming in the FTSE. Here's your neckline right here at 9,150. So if we can clear a breakdown below 9,150, we're gonna start thinking about 9,060, and then potentially all the way back to 88.15. 88.15 would take us back to levels not really seen. This was sort of a sticking point back here at the beginning of the year, and then even back here in mid-June. So those are the two levels we're looking at. Meanwhile, you got to get above 93.20 or so for there to be a breakout consideration. Also trading below the 20-day moving average. So European markets, UK market looking a little bit weak at this point. When we move over the NASDAQ, it's certainly a different story. We can see on the NASDAQ trading up over the upper Bollinger Band. Here you can see the RSI right now, right around 68 and 70. I had drawn this big pattern out a while ago. I thought it was an interesting setup, but so far it's not looking like it's going to work, although we are just hitting the upper trend line at this point. What was interesting about this, I wasn't going to get into it, but I might as well, is that if you measure from here to here, it's equidistant from here to here. So I just thought that was interesting in terms of how it was lining up with this low to this high, to this high, to this high. So there's a pattern sometimes called a bottom to top, or a top to bottom, and sometimes it can be marked sort of turning points. So something to keep an eye on, obviously, if we break below 23,000 or so on the NASDAQ, although right now that seems fairly far away. I don't really have much to add here for the NASDAQ, only because we're trading above the 20-day moving average. We're trading above the 10-day exponential moving average. We're even trading a little bit above the upper Bollinger Band. So NASDAQ seems like it's fairly overextended at this point. I would think that we would get a period of sideways consolidation, maybe even some sort of pullback. But, the market here in the U.S. has been acting a little bit crazy more recently. When you look at the S&P, a very similar situation. We were above the upper Bollinger Band 4 days in a row. RSI got up to around 69.7. It looked like we were forming a rising wedge. It's possible that this could still be a rising wedge, and this is sort of a bump up, and we're going to see a comeback in and around. But right now, until that happens, market trends have been strongly higher. 20-day moving averages are favorable. The 10-day exponential moving average is favorable. So it's really tough right now to get too negative on U.S. markets, just because we're not really seeing anything that gives us convincing evidence that we shouldn't be. But when we look at the Dow, you can see it's a little bit different. It has stalled out a little bit in this, call it 45,600 area, which goes back to mid-August. So the Dow is, currently at an all-time high, but you can also kind of begin to make a case that maybe we're seeing, something else starting to develop here. Here's your uptrend. So that's certainly a breaking point here. If we were to get below this 45,600 area, that would set up a move back towards 45,000 and bring us back to the prior highs. But again, there's still a little bit of room here to work. I just thought I'd mention the RSP, which is the equal weight S&P 500. It just gives you a slightly different view in terms of what's happening in the market when you sort of take out the madness that's in the the big mega cap names here. The RSP just gives you a little bit more of a negative look to it. And the reason why I'm pointing it out is because of what looks like a rising wedge pattern that's here. And I think that's noteworthy. You can also see RSI momentum turning lower, and you can see we're kind of sitting at an important level of support around this 187.80 area. So anyway, that's all we're going to have for this week. Hope you found this helpful. We'll see you next. Bye.